What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go and sign up for the newsletter at coinmastery.com/invest and join us on this amazing journey to inconceivable wealth and fortunes through cryptocurrency. Today, we're talking about Bitcoin. We're talking about a few things that I want to address about dominating crypto, which I think are very pertinent. I want to talk about what's going on with altcoins a little bit, and then I want to talk about a few pieces of news and a couple articles that I read that I think you guys will find very helpful. Days like today, it's one of those things where there's actually not a whole lot you can do. The opportunities really come when there's going to be big swings that are easily explained. And one thing you notice, maybe you don't notice, is that if you go on Facebook or Twitter or wherever you hang out, and if you see people ask, hey, why is Bitcoin price going up right now? You're going to see 20 different potential reasons, right? Some people are going to say, oh, it's because Amazon may release it. Some people are going to say, oh, it's because of the fork that's coming up. Some people are going to say, oh, it's because of the futures exchange, which I'll talk about. There's just going to be all these different reasons. Everybody's got a reason. And unfortunately, it's virtually impossible to prove unless you know the people that are actually buying the Bitcoin. So that's the first thing. We talked about that a little bit a while ago, where often it matters less, or the search for finding out what the reason is a waste of time unless you have a very good plan to do once you figured out. For example, if you found out that it was the Amazon news was the reason why this was going up, which I don't think it is, then you could potentially watch the earnings report and short Bitcoin based on Amazon or whatever it may be. But most people are not really going to get to that level. It's more just a really good way to waste time. So when you see these kind of price swings, typically the best thing you can do is, get your fix on whatever the hot new excitement is in crypto, but focus on something else. If crypto's your full-time thing, great. Focus on what you're going to plan and what's next. But I see stuff like this, and I don't even try to figure out exactly what's driving it. One thing I can do is look at the charts, which is the illustration of a lot of stuff. And if you look down at the volume right here on the Bitcoin 60-minute chart, the volume actually isn't that big, right? To see this kind of big spike, the volume overall isn't really that impressive, which means two things. One, it's mostly buy orders, or relatively mostly buy orders, and it's probably a smaller group of people that are buying it, because typically when you see big spikes one way or the other that have a lot of volume, that's when it's more of an overall market move. When you see less volume and big price swings, it's more of a concentrated movement. So you can extrapolate what you want from that. But I'm looking at this current price point, and I'm just, I'm expecting the price to go up a lot until SegWit 2X. I don't know if it's going to dip down to that 4,900 level before or after SegWit 2X. I think it will at some point, which is really all I care about. In the meantime, I'm not really going to try to chase this and figure it out and just get lost in the volatility, because I know myself. I know that doesn't work out nearly as well as when I buy the really bloody stuff. So I'm just going to wait and hang out. Yesterday's dip ended up being not at a severe bull pattern as we expected. Came back up, and now we just, hurry up and wait type of situation. At least that's what I'm going to do. Which, it's the name of the game. Okay. Something that I thought would be fun to talk about is somebody commented, I don't know if it was on Twitter or emailed me or something, but they said, hey, Carter, it's funny because let's say a month and a half ago now, 2 months ago, on YouTube, I said, man, I'm going to go all in on crypto. This is, I would be crazy not to try to capitalize on this. And I still do. That's exactly how I approach every single day. And I think a lot of that is because a lot of the content has gone from being, I went and rewatched a lot of content. A lot of it was like, hey, here's the pick. Here's what I'm looking at. Here's the exact trends. Here's the buy limit. Here's where I'm going. And now it's more strategic. It's more about what's happening in the markets, what to do with your portfolio, risk management, more top level, less micro stuff. And I think that it's an interesting observation for me and for, I'm sure, the viewers, because when you are picking stocks or picking coins every time, when you are aggressively being like, here's what I'm doing, here's what I'm trading, here's how I'm going after it, that energy, that aggressive outward energy is typically what people see as going all in on a market. And what I would encourage people to think about is thinking about the end game, right? The only thing that going all in on crypto means is that I'm going to do everything I possibly can to get the maximum return out of crypto. If that means I don't trade again for the next 3 years, that's what I would do. That's not what I will do, but it doesn't matter about how much effort or how much energy or how much screen time you're putting in. It matters what your returns are. That's all that matters. And the reason why I'm bringing this up is because I think a good analogy to this is guys like Jim Cramer versus guys like Ray Dalio. And if you don't know who these guys are, right, Jim Cramer, I think everybody knows, Mad Money, where he gets on his show and he has 10 to 15 stocks a day. And he says, I'm bullish on this, I'm bearish on this. And it's very entertaining. I will say Jim Cramer was a very successful hedge fund manager and trader his whole life. And even now, he is very successful in his own right. And what you see on Mad Money is entertainment. That's not advice. You can go look at plenty of back testing that shows you that the picks he makes don't even come close to index funds. So realize that his aggressive style of here's what's happening, here's what I'm trading, here's what I'm going after, does not necessarily mean he's making more money than boring Vanguard. And that is a very important distinction to make when you think about, okay, I'm going all in. It does not mean you're going to drink more Red Bull and put in more hours into crypto. It means that you are focused on maxing out your returns as much as you possibly can and getting as much money into crypto as you possibly can. Like, what's your final goal going to be? Because some people may look at crypto and say, look, I don't like the risk profile of this. I'm just going to put in 3% of my portfolio and we'll see. That's one, versus I'm looking at, okay, I need to figure out how to make as much money as I possibly can to put into this and into the smartest possible vehicle. So you compare someone like Jim Cramer to someone like Ray Dalio, who's on the other extreme, who's pretty private, pretty boring, hedge fund manager, very strategic, all about decisions. And he looks at how do you make 35 to 40% a year on, let's say, 100 billion under management, which is insane. I mean, that's just completely crazy. And I would say I'm kind of in the middle, and a good, not that I'm trying to mirror it, but if you guys watch Billions, that's a good middle ground, I think, between these three. Right? A guy like Bobby Axelrod, who is based on real life characters, maybe guys like Steve Cohen or Bill Ackerman, legendary hedge fund people. Hedge fund manager who is very aggressive, wants new opportunities, wants to make more money, but the first thing they think about is always, are we going to lose anything? Does this have any chance of going the wrong way? And how do we completely mitigate the downside possibility? Then let's talk about what the biggest upside potential is. And guys like Bobby Axelrod, I don't think I'm like this at all. I don't have that kind of personality, but I am not the Jim Cramer. And I think that I'm not trying to be Jim Cramer. I think that if you want Jim Cramer, most people are just looking for entertainment more than they're looking for real returns. I would rather be Ray Dalio with a little bit of Bobby Axelrod than anything else. And what that translates into is when you look at these swings, maybe not on Bitcoin, but if you open like OMG or any altcoin, what these guys what they really care about is not necessarily picking OMG like the way Jim Cramer would. They're obsessed with picking OMG right here. And if you're listening on the audio, I'm pointing to the candles that right before the pump. That's where they spend all their time. They spend hundreds of hours, thousands of hours trying to get information that allows them to beat everybody else in the market to the moments right before the huge pumps so that they can make enormous amounts of money. Maybe it's in a matter of hours, maybe it's a matter of years. But that is where aggressive hedge funds spend their time. And in these candle pops is where Jim Cramer viewers tend to spend their time. Is like, oh man, this is blowing up, I want to go get it. Versus the pre-candle is where you go. And that's the kind of stuff that you just do behind the scenes. That's why finance is competitive, is because you got to beat everybody else. Because if you don't beat everybody else, there's not going to be a huge upswing. You got to be before everybody else to do it. So I'm not saying this in any other way other than you need to be clear about what your aggressive style is. If going out and deciding on certain coins and going all in and being like, hell yeah, YOLO, let's do this. If that's your style, go for it. And if you're getting insane returns, go for it, which we'll talk about in a second, actually, how that plays out. But my version of going all in, after talking to a lot of people, is the blended hedge fund model, where I'm obsessed with finding good information, finding good coins at the right times, loading up on that before the market hits it, and then arbitraging it as best I can. That could be on a 1 week window, it could be on a 3 month window, it could be on a 3 year window. But that's what I mean by going aggressive. But what you find with everybody, no matter who you are, if you want to make a lot of money, the only thing you need to you have to save your money. You have to protect your money before you can make any. Otherwise, you're just going to lose it all, make it all, lose it all, make it all, and you'll end up making like 10% overall when the market goes up 300, and that's just like the worst. So I thought maybe it was an unspoken thing that I hadn't really explained because I do so much offline that it may seem like, thanks for the top level risk stuff, portfolio management, but that's so boring. Where's the real money being made? And the real money is made when you get info before everybody else. That's also why I don't pump stuff. That's why I don't talk about individual coins as much, is because there's a lot that comes with it when you own a lot of stuff. You can't really tell people, hey, go buy this, go buy this. All right, so altcoins. I think the one thing with altcoins that I've been thinking about a lot, and that I think today, maybe not today, but over the next 2-3 weeks is going to be very pertinent, is the idea of selling low. And obviously you want to buy low, sell high. That's the game. Always is the game. But everybody is going to get to a point in the next month or two where you need to make a very, very good, clear decision. And that is the following. Do you fundamentally believe that even though your altcoin went way down, over the long term, it's going to beat Bitcoin? Right? Let's say you own some metal, MTL, right? If you own some metal coin, and you are, why is this chart going? And let's say you own it and you bought it, let's say at 162, and now it's down to 142. And you're like, well, I can't really sell it because, metal's got all this possibility and it's got, blah, blah, blah. And I did all this research and I like it so much. And there's something to be said for holding your coins. I don't want to dismiss that. However, what you really are telling yourself is, I'm going to hold on to this because the returns I'm going to get from metal are better than I'm going to get from Bitcoin over the next year. So in 1 year from today, the ROI from metal will be better than if I sold it into Bitcoin and watched Bitcoin do its thing. And nobody can really answer that. I think that comes down to fundamental analysis, but people get hung up on the emotional side of it, of the attachment to coins, and they forget that the only question that matters in this game right now is this going to beat Bitcoin over the long term, over the horizon of selling it. Because if it's not, you shouldn't be holding it. You should be holding Bitcoin. And I think that there's a short-term discussion about that, right, between now and the fork. And then I think that there's another discussion about what 2018 is going to look like. But as I look through my portfolio, as I see other people making decisions about their portfolio, that question's really uncomfortable, but it's also a very important, it's the question to ask that you need to ask yourself every single time. And if you're not asking that question, you're just gonna, it's just gonna be a lower profitability than it could be. And which ones will beat Bitcoin? That's up to you. That's your call, right? I don't know. I mean, I could give you my thoughts. Many of you know my thoughts about what I like. I mean, obviously I talked about Stratus yesterday, about they start delivering, that's going to be great. Omise Go looks good, but that's your call to make. I probably wouldn't sell anything today because of this immediate spike up. You're going to get some emotional drops. But when you look at the USD prices, the chances are if Bitcoin's going up and that's causing the price, you're not going to lose a lot of money. You lost a lot of potential money with Bitcoin, but you actually probably didn't lose much on your initial investment. You're going to break even and maybe even get a capital loss, which some people may want to think about taking capital losses to offset their gains for the end of the year, assuming that taxes that your jurisdiction, that's how they tax this stuff. So I think that we're going to see more and more of that, where you just need to have that conversation with yourself, where every altcoin you need to ask yourself, is this going to beat Bitcoin long term? Am I highly confident? And keep asking yourself that question. It's going to be a big one to help you make the most amount of money. Some big news coming out of the CBOE, which is, I believe, the largest options exchange in the country, maybe even the world, but it's based in Chicago. And they just partnered with Gemini, I think they partnered with Gemini in August, and then they finally released a statement this morning, or last night, I should say, where they're going to create a Bitcoin futures market by the end of this year or by early next year. That is a very, very big deal. One, because it's traders and institutional money love derivatives, specifically futures. And second, it paves the way for ETFs to start rolling out, because there's inside the ETF, there will now be instruments to rebalance the portfolio, to tax harvest stuff and to hedge upside, downside. So there's a lot of ripple effects that happen. No pun intended about Ripple the coin. Keeping this in mind, the big thing to note, one, it's way bigger than Ledger X. Two, it's unclear if this is going to be available to regular investors. Ledger is only available to institutional investors, not even institutional investors, institutions, banks, funds, people that can prove that they have a large amount of money. What we really care about is when we can get access to a futures market the same way we can get access to Bittrex or Bitfinex, not so much in the US, BitMEX, any of these, hey, sign up and start trading. That's what we really want, for better, for worse, assuming you know what you're doing. But this is going to be an enormous deal when this comes out, and further solidifies my thesis that I think 2018 is going to be monumental, I think, for Bitcoin mostly. And I think that crypto in itself is going to be a rising tide. But this is huge. This is a really big deal. And what you can do about it is, obviously, one, own Bitcoin. Two, you can start to learn about futures trading. It's not that complicated, but it is important to understand how to manage your risk and how to manage your leverage so that you're not, anytime you're playing with derivatives and options and stuff like that, it's no joke. You can lose your shirt pretty fast, but it's an amazing tool if you know what you're doing. So I would start brushing up on that. You can go to stuff like babypips.com. free training courses. Just type in futures investing. There's plenty of stuff out there that can help you with that. So keep your eye on that. I'll do this article. Peter Thiel. I've mentioned Peter Thiel. I like his style of investing. He is a very unique individual. I'll leave it at that. But he's extraordinarily contrarian in his personality, his thoughts, and his investing style. So he's also historically been very accurate in predicting trends. And he came out last year and said a few things about Bitcoin that were bullish, but as bullish as you can be without sounding like when everyone jumps, attacks you. And now he's coming out and he's saying, hey, Bitcoin is really legit. The rest of crypto is kind of up in the air, but Bitcoin could be huge. And so it's a good sign. I mean, this is a really good sign. A lot of people in the investing world and in the mainstream world, I should say, they know who Peter Thiel is. He's the first money into Facebook. He founded PayPal. He's got a whole string of billion-dollar investment companies that he was one of the first people to found. So for him to come out and say that there's a lot of potential here and people are underestimating it, it's a really big deal in terms of pushing that boulder over the cliff that gets the momentum going. You bake that into futures markets, which allow people to hedge their bets. You start getting to a big enough market cap that can support this kind of liquidity. Things get interesting. So this is great. This is the kind of thing we want to see. Along those same lines, I just finished a mini course, I should say, for people who don't own Bitcoin yet, with the intention of, this is something that just all my friends have been asking me about. And I've taught so many people, like one-to-one. I started recording it all. So probably the next week, I'll have a course that if you know anybody who doesn't have any Bitcoin yet, or if you don't have any Bitcoin yet, you should take this course. It's really easy. It's like $20, but it lays out everything. It's all resources, step-by-step videos. Because just like this guy, I want to be a part of pushing this rock over the ledge too. And I think that this is going to get hopefully a couple 100,000 people to go buy $100 worth of Bitcoin. And that's really the best thing I can do for this whole crypto community. Last thing I want to talk about, I tweeted about this, is a really interesting article from Nassim Taleb, who is a economist, investor, former trader, brilliant dude. And he has a very unique style of thinking and writing. Some of what, I would say I agree with him, but I don't necessarily agree with it on a personal level, but I respect it, and I'm in awe of a lot of the way he can think. It's really impressive. But one thing that he tweeted about, that he talks about in this post, and I'll link all this stuff up, is what he calls the logic of risk taking. And I'll give you the too long don't read of this, which is that when it comes to taking risks, and you look at the average of taking risks, the sequence of when that average is played out makes a huge difference in how people will take risks. Let me explain what I mean by that. If you go to a casino and you know that the craps table, these are hypothetical numbers. Let's say the craps table returns 55%. So it means that you hear that number and you say, all right, well, if I play long enough, I'm going to win, because over the long term, 55%, I'm always going to do well. But what you don't know is when that 55% gets calculated, meaning there could be 3,000 losses in a row and then 3,250 wins in a row, and it's 55%. But if you start playing at the wrong time, your tolerance for risk is going to change and be different than if you start playing and you win all the time, even though the average stays the same. And this is true in every situation, where his argument is that it is the sequence of events, of probabilities that change the risk taking that you do. The example he uses is in risk capital. So if you ever do a swing trade, if you buy $10 and it goes to $15 and you sell off your initial investment and then you have profit left over, what people call house money, the risk profile of that house money is often very different than the risk profile of the initial risk capital. And what he's saying is that really doesn't make a lot of sense rationally. But because you have already mitigated one set of risks, you now think that you can be more aggressive with the new set of capital because it's free and that you can be a little bit more lenient and loose with that. And he doesn't necessarily agree or disagree with that from a strategy standpoint. He points out that the psychology changes because the sequence is different. If you lost money up front, you wouldn't necessarily be more risk tolerant of the extra money because it wasn't free for you or whatever it may be. And that is interesting. And the way this relates to crypto is one, with that trading idea, but two is when you look at the sequence of events of how we are taking risks on all of our purchases. When you go on Twitter and you see people that have been trading for years and years, they often talk about, oh man, wait till you see a bear market. If you can't trade in a down cycle, you don't know what you're doing. And this is blah, blah, blah. It's like, oh, I've been there. I know how this is. And they have a very particular style and experience that trades a certain way versus somebody who started trading in, let's say, April or May of this year, of 2017. They are going to have a very different perspective on trading because the first 2 months of their trading careers was a vertical curve. I mean, you couldn't fall over and lose money in crypto in May and June, right? Like you just had to be able to breathe and have some money in the market. You'd make 50%. And then now, a lot of people went huge bull market to quasi doldrums for altcoins. I mean, Bitcoin's a different story, but the sequence is different. You had a huge win up front and now it's a doldrum market versus a lot of other people who started in a doldrum market and now they hit a bull market. Now they're in a doldrum market again, or whatever you want to call it. And the way that sequence works changes the way people take risks. And I think that also ties into what I was talking about earlier, going all in. In July, when I started these videos, it was a very different story to be able to go in and trade altcoins every day and be able to make money. It was a lot easier. Now, it's a lot more difficult unless you have really good information. And so my strategy has changed accordingly because the risk profile has changed. And I'm doing my best to try to stay objective and not get ahead of myself in that sense. And I would encourage everybody to think about that on some level. If you started off and just got crushed by all of your trades, maybe some of you have, right? Maybe some of you bought in at 6,000 and watched it drop and you're like, oh my God, I can't believe this. Or 5,000 went down to 3 and then you came back. That experience will change the way the risks you take and the decisions you make. And that's a big part of the game in finance, but especially in crypto with the volatility, is being able to be objective, being able to say, look, the long-term statistics are as follows. In trading, 5 to 10% of people are actually going to make a living doing this. If you looked at May and June of 2017, it was closer to 75% of people were going to make a living doing that. But when you look at a 5-year window, it actually looks more like 5%. So where are we in that curve? It's got to average out some point. And that's why I always talk about playing the long game. I'm starting to talk a lot about diversification because you have to look at the long-term window because we're going to get huge wins and you capitalize on that. You're going to get huge dips that you buy in, which we talk about. But over the long term, the fundamentals of finance and markets will hold true And if you do not play that game from the start, it's eventually going to catch up to you, because the law of averages will catch up to you. It has to. That's what makes economics work. That's why fundamentals are what they are. So I thought this is a really interesting article. It's very analytical, but I think that if you like this style, you'll definitely appreciate this. I'll link to it. And I would encourage people to audit where you came into the market. What events caused you to come in? What events caused you to start trading? What events caused you to sell or buy more? And how does that compare to what the old, like, what would Warren Buffett say? Not necessarily about what he thinks about crypto, but what would he say about the probability of any one of us beating just holding Bitcoin? He'd probably say it's pretty low. It's possible. And here's some tools to go try it. But eventually the averages will catch up to us. And if you're not playing that game and then adding to your stack when the volatility kicks in on the dips, you buy in more or whatever. If you're not playing that game over the long term, starting right now, that's just how it works, unfortunately. No, I would say unfortunately. I say fortunately. You know how it works. You know how the game's going to play out long term. And so it goes. So cool. Check it out. And I'll let you guys know about that course. It should be out next couple of days. For most of you, probably, not going to learn anything new, but it will help people that who do not own Bitcoin yet. It will get them to go out and buy $100 worth of Bitcoin so that they're in the game. I'm going to release the Vinny Lingham podcast on Saturday, just because that's when I don't do videos. So it makes sense to do it on then. So you can expect that this weekend. And in the meantime, thanks for watching. Thanks for listening. I will catch you guys tomorrow. Peace out.